Welcome to Unleashed. I'm your host, Will Bachman. Unleashed is powered by Umbrex. You can visit the show online at umbrex.com/unleashed, where you can find the show notes and the transcripts for every episode. Today's episode is a presentation that Chad Oakley gave to members of Umbrex on May 12th, 2023. Chad Oakley is the CEO of Charles Aris, which is one of the leading retained search firms in the United States focused on management consultants and placing former management consultants. Chad spoke to us about the current state of the job market for consultants, and it was a great discussion. He kindly allowed us to share that discussion as a podcast. So without further ado, here it is. Hello and welcome, everyone. I am so excited to be here today with Chad Oakley, who is CEO of Charles Aris. Charles Aris is one of the top retained search firms in the U.S. for placing former and current management consultants. We're talking today about the shape of the current job market for consultants. And we're going to be doing plenty of questions. So if you have questions, put them in the chat. We're also going to be publishing this as a podcast episode later. Chad, let me turn it over to you. I know you had some initial thoughts you wanted to share. So what is happening in the job market?
Well, thank you so much for having me. It's great to be back with the Umbrex team and great to see everybody. So team, I want to make this as interactive as we possibly can. And I want to try to be a sounding board or assist in any questions that people have in the marketplace. I thought, though, that maybe what I could do is lay the groundwork on a handful of things. So maybe first I'll just give you a slight introduction to Charles Aris, just so everybody knows kind of who we are and what it is that we do. That'll give you some context for how I spend my time and kind of the perspective that I'm bringing to this particular conversation. Then maybe I'll talk just for a second about our strategy practice, so you kind of know what that practice is all about. And then what I thought I'd do is maybe talk about the market today, what we're seeing in the overall hiring market, just in the world. And then maybe talk about the consulting market, specifically what we're seeing from that particular space. And then we could also talk a little about what is selling today, right? Where are we seeing demand from our clients, which I think would be helpful too. And so, and then I'll be happy to answer any and all questions that people have. Does that, Will, hopefully that sounds like a good, all right, awesome, fantastic. Team, first and foremost, let's talk a little bit about Charles Aris, right? So Charles Aris, we are a classic executive search firm. We really do one thing. We're kind of a profit from the core kind of group, hedgehog philosophy. We really just help companies find great talent for their businesses. So a very specific search. Every search we do is bespoke. So for those of you in manufacturing who have that skill set, we're a job shop, right? Everything we do is an individual search, if you will. We've been in business now for 54 years. We've got roughly 90 team members on our team that are located across 15 states. And we have 5 key functional areas of focus. As Will mentioned, strategy is our largest practice. We also have a corporate development practice that places former investment bankers into merger and acquisition type roles. We have a finance and accounting practice that places CFOs, controllers, and FP&A talent into the marketplace. We also have an engineering, operations, and supply chain practice, which places basically engineers into operations-focused roles. And then we have a sales and marketing practice, which places chief commercial officers, chief marketing officers, and everything in between those particular positions. We do those types of searches really across almost every industry you can imagine. Our top industries would be industrial, consumer, and retail, financial services, private equity, healthcare, and life sciences would probably be the big areas for us. Our client base is split 50-50 between private equity firms and their portfolio companies and then non-private equity organizations, publicly traded companies, et cetera. And we do produce monthly newsletters for every single one of those practices that I just mentioned, whereby we list every search that we are working on at that particular time. Those newsletters also include offer reports and compensation studies that will help you to benchmark the market around compensation. So if you are interested in learning more about all the searches that Charles Aris is working on a regular basis, you can sign up for all of those newsletters for free, of course, on our website, which is at charlesaris.com. Okay, but hopefully just as a high level about who we are and what we do. Let's talk about our strategy practice, because I know strategy is the real focus of this particular group, right? So we are, or just consulting in general, right? But we are fortunate to have the largest strategy recruiting practice in the United States. I started that practice in 2003. I'm a former consultant myself. I worked for Deloitte Consulting. I went to Wharton for my MBA, and then I went to Bain and Company. And then in 2003, I came here to Charles Aris and started our strategy practice. That's a practice that has completed to date just over 1,250 searches. And there's really no other firm in the United States that's done that many kind of strategy type searches. We place those strategy searches are basically we're placing current and former strategy consultants or operational consultants from the usual suspects. So Bain, BCG, and McKinsey would be our big three, if you will, but we work with individuals that come from firms of all shapes and sizes, right? So the LEKs of the world, the Parthenon EYs, the Deloittes, the Accentures, the EYs, the KPMGs, right? All of those types of firms we're constantly working with and talking with individuals from those organizations. We place those individuals at private equity firms, private equity-backed portfolio companies, publicly traded companies, and privately held companies that are not associated with private equity. And we work up and down the stack from a pre-MBA candidate, right? So an associate level or analyst level, all the way up to the partner level and everything in between is kind of who we are. So hopefully that gives you all some context about how I spend my time and how our firm Charles Aris spends its time as well. Okay. How about if we talk about the market today? And I'm going to talk about the market broadly, and then we'll dive deep maybe into that consulting space, the strategy space. So let's talk broadly. All right. Wow. What a difference a year makes, right? So last year at this time, if we go all the way back to May of 2022, last year at that time, the United States was experiencing perhaps the greatest candidate-driven market in modern history. You all will know this, right? Companies were begging their most mediocre employees to stay, begging those individuals to stay. And the unfortunate part is those mediocre employees, along with the very talented employees, were leaving firms for upwards of 50% pay increases. We saw 50% pay increases on a regular basis. Truly unprecedented times for us in the United States. And let's face it, completely unsustainable and definitely unhealthy for the economy. And we're starting to pay some of those, pay for some of that now. It was, to use a phrase from Alan Greenspan, irrational exuberance in the hiring market. The inmates were definitely running the asylum, right? And as a recruiting firm, we were truly overwhelmed with search requests. For the first time in our company's 54-year history, we had to implement a 40-day delay on all new searches, which we had never done before. It's a great problem to have, but it is definitely a problem that came with a lot of stress. Thankfully, and I really do mean thankfully, we started to see a pullback starting in December of last year. Jerome Powell, as you all know, and the Federal Reserve had declared inflation their number one enemy. They made it very clear that they were going to raise interest rates to tame inflation, even if that meant driving the economy into a recession, which I think we are headed in that direction. So if you were to just press pause on today, where are we today? I believe that right now, at this moment in time, we're in the middle of a transition from what was a 100% candidate-driven market to what I believe is going to be maybe a 75% company-driven market. What I mean by that is that a company-driven market where companies have the majority of the power versus last year when candidates had all the power, right? I will say that there is some confusion in the marketplace, right? There are some very strange mixed messages coming from the market right now. We get asked a lot about these mixed messages, so why don't we talk about that for a quick second? So on one hand, you have report after report after report, article written after article written about companies conducting layoffs. We can't go a week without reading multiple articles about major companies announcing sizable layoffs, which is always disconcerting, right? For instance, Amazon alone has announced 27,000 layoffs this year. 27,000 is a lot of people that are no longer employed. And Amazon, of course, is just one example of a major corporation announcing sizable layoffs. On the other hand, the monthly labor report continues to be incredibly robust, right? It comes out, you all probably know this, right? But the Department of Labor releases their labor report the last Friday of every month. This past Friday, the Labor Department reported that we added 253,000 more people to payrolls in April, which is a very respectable number. And the unemployment rate fell to 3.4%, which is the lowest unemployment rate level we've seen in over 50 years. So how is this possible, right? What is really going on? How can you have both companies announcing massive amounts of layoffs, and yet we're still adding to the payrolls and unemployment rate has fallen to the lowest level? I think in order to understand this, it's really important to remember just how many people a lot of these companies hired during the pandemic. It's easy to forget these kind of crazy statistics, but does anyone remember how many people Amazon hired in 2020? Amazon hired 500,000 new employees in 1 year in 2020. 500,000, right? That is incredible, right? And Amazon, of course, is just one example. So a lot of companies hired a lot of people. It's also, of course, important to remember that the very best run companies in the world in a normal year terminate the bottom 5% of their performers, right? That was a big Jack Welch at GE mantra. You got to get rid of your bottom 5% every year. And the best companies really do that. They replace them with new talent. And then the next year, they, of course, terminate the next bottom 5%, et cetera, et cetera. But how many people did companies terminate during the pandemic? Zero. They terminated no one, right? As we said before, they were begging their most mediocre employees to stay until the fourth quarter of last year, they were begging them to stay. The best way to describe what companies were doing during the pandemic is talent hoarding. They're trying to keep every last person they possibly can, right? So what are we seeing now? We just see companies catching up in the layoff department. We're 2 years overdue on removing the bottom 5%. So you hear 27,000 layoffs and you think, whoa, that is a big number, right? But when you think about it across multiple years, it is a fraction, it's truly a fraction of the number of jobs that have been added. But the good news, which is where the payroll information comes in, right? The good news is that for those people that are being laid off, they are being rehired by other companies pretty quickly. They are being hired by those companies that, frankly, couldn't hire them during the height of the pandemic because they just couldn't match the compensation from the bigger, more profitable companies, right? When you get that offer from Amazon and it comes with a massive amount of stock options that start to vest pretty quickly, it is really hard to turn that down. Even if you had an interest in that other company, you're like, hey guys, sorry, I've got an offer I can't refuse, right? But when you've suddenly been laid off, you get a little bit more realistic about your compensation expectations. So while we continue to see a low unemployment rate because all these employees that are laid off are being picked up, we're definitely seeing a slowdown in the level of increases in compensation packages, which is exactly what Jerome Powell and the Fed was hoping would happen. So that is good. I will say this, though. There are certain pockets of the market where we still continue to see unprecedented demand. Literally, the call that I had right before this one was with our leadership team, and one of the people that leads our finance and accounting practice just lost a candidate to a counteroffer where they received a 40% increase over their current compensation. So again, we're still seeing some of these crazy increases in compensation, even today, after the economy is, really starting to cool off. Okay, right. So that's kind of the broader thing across the board from a market perspective. Let's talk about consulting and what we're seeing in the consulting market. Okay, so team, we speak to hundreds of consultants every month as an organization. We've got 40 people that do nothing but talk to consultants all day long. So we are talking to hundreds, if not thousands, of these individuals every single month. So what are we seeing right now in the consulting market? In short, it's not good. It is not good right now, right? As many of you know, professional services are a market leading indicator when it comes to the economy, and the demand for consulting services is way down relative to this time last year. Just to mention, we speak to hundreds of consultants every month. The vast majority of the consultants that we speak with have spent considerable time this year on the beach or have been working on internally facing projects. By the way, when I say on the beach, many of you probably know this, but for those of you who don't, at firms like Bain, BCG, and McKinsey, if you have a gap between projects, if you finish one project and then you don't start your next project for a period of time, they call that period of time being on the beach because you're pretty much allowed to kind of go do whatever you need to do, right, during that time period. You're not really working. Last year, right, there was no beach. Last 2 years, zero beach time, right? You finished your project in the next hour, your next one kicked off, right? Also, you never really worked on internally facing projects because the external client demands were just way too high. So we're seeing a lot of beach time this year, and we're seeing a lot of internally facing project time this year as well. My guess is that many of you might be experiencing similar challenges. I hope you're not, but it wouldn't surprise me if you are, right? Your phone is probably ringing a little less this year than maybe it did last year. And unfortunately, it is my opinion that based on some of the Federal Reserve's actions, I think this is going to get worse before it gets better, unfortunately. The major consulting firms are rolling out their recession playbook, which they have down pat, right? It includes a number of cost-saving initiatives. So just so you know what the consulting firms are doing right now, they are doing a handful of things. Number one, they are managing people out at a much more aggressive clip. Anyone that the firms don't believe have the ability to become a partner one day in the future, really regardless of your current position in the firm, you've got a higher than average chance of maybe being managed out this year, unfortunately. At the same time, promotions are slowing dramatically. Consultants that would have easily cleared the bar for a promotion last year will fail to be promoted this year. And the reason, of course, is that promotions come with a higher base salaries and higher bonuses. We add to our cost basis, and the consulting firms, revenues are going to be down this year, and so they need to save money as well. So promotions will slow dramatically. I will say what's interesting is one of the biggest lies that is told by the major consulting firms. These are honest firms and honest people. There is a lie out there that they say, right? They will tell you that the bar for promotion never changes. They will tell you that the economy never factors into promotion decisions, and that is absolutely not true. It is a major factor in promotion decisions. Of course, the consulting firms will be hiring fewer new consultants off of campus this year as well, and they'll certainly be hiring fewer experienced hires as well. They are also delaying start dates for those new consultants. Many of you may have seen an article in the Wall Street Journal last month in April indicating that McKinsey and Bain were delaying start dates for their 2023 classes until 2024. So they're pushing start dates out 6 to 8, maybe even 12 months, which is a major indicator of a slowdown in project work. Bain has done some truly unprecedented things to slow down their new hires, right? Bain has told all of their new hire MBAs that if they wait to start until April of 2024, that Bain will pay them in the interim, and they'll pay them on a tiered amount, right? So they'll pay, if you go work for a nonprofit, they'll pay you $40,000 to go work for that nonprofit. If you go learn a new language or participate in some kind of educational program, they'll pay you $30,000. And if you just want to go have some fun, go on safari or become a yoga instructor, by the way, these are all very specific examples that Bain gave, they'll pay you $20,000. So they're truly saying, just delay your start date, we'll pay you $40,000, $30,000, or $20,000. That has never happened in the past 20 years, right? Bain also just last week announced something very interesting. So they announced that if you declare transition, that they will pay you out 100% of your transition dollars, even if you land a new job in week 1 of that transition period. So people may not know what this transition piece is. So Bain, BCG, and McKinsey have actually a program called Transition. If you're a consultant for one of those firms and you decide that you want to leave and go do something else, right? Go to corporate America or do anything else, as opposed to interviewing on the side while you're doing all your consulting work for the firm. Instead, they say, hey, just let us know that you're ready to leave. We'll move you off of that project work and we'll pay you for a period of time, up to 6 months, to go and find a new job for yourself, right? And we'll give you all these other resources that help you to find that next job. They do this because they don't want people trying to do both at the same time, because you're just going to compromise the amount of attention you're giving to your clients, right? They call this transition. If you're a junior consultant in the firm, you usually get 3 months or roughly 12 weeks. But if you're a more senior person, you could get 6 months, maybe even up to a year if you were a partner. Historically, if you declare transition and in your first week of transition, you got a new job, then your transition payment stopped on a dime, right? Because they don't want to say like, hey, you can go on vacation for the next 11 weeks while we'll pay you, right? So they said, sorry, your transition stops. What Bain is saying is, hey, if you declare transition, we're going to pay you for your full 12 weeks, even if you get a job in the first week. So you want an 11-week vacation, you can now have it. Basically, they're just trying to move people out of the firm because they're not going to have the amount of work, right? It's what's very clear. The consulting firms believe that it's going to get a lot worse before it gets a lot better, unfortunately, okay? Team, let me pause for a second. I want to see if there's questions that are coming through for individuals. And then what I'd love to do is I'm also happy to share kind of what we're seeing, where we're seeing demand. right, for our services, because it's also probably likely where you all will see demand for your services as well. Christine, I see you got a question, right? Is there high correlation between the demand for consultants at consulting firms and demand for independent consultants? So you guys actually will probably be able to answer that question better than I can, just based on the demand that you're seeing for your own services. But my guess is yes, right? If companies are slowing down the hiring of the Bains and the BCGs and McKinseys, it's in some ways, they may very well replace those resources with less expensive resources, right? So they might say, hey, I no longer have that budget where I can spend $1 million a month, right, on a project, right? But they might have something, a smaller budget that, the Bain, BCGs, and McKinseys just won't mess with. And so it is possible that they will transition that to independent consultants. And so it's not, independent consultants, I think on average, are usually a little bit more affordable than what you might see from those firms. So it could be, but my guess is that there is a correlation that you would probably see there, Chris, if you will. Dwayne has asked, does strategy include technology, strategy, and digital strategy? And the answer is yes, right? It is. It does. So I'm talking, I know strategy, but I'm talking consulting of all kinds, all shapes and sizes, operations, IT, everything in between. You guys have these good questions and they're coming at me quickly. So hang on, I've got to scroll up. Are you seeing regional differences in hiring trends? Not necessarily. So maybe I'll answer this. So if you want to know about remote versus in office, right? So right now, I would say that probably 80% of the searches we do have a location requirement. Might even be a little bit higher. It might be 85. I might go 85% of the searches we do have a location requirement. In other words, we need someone in this location. And the reason is because we expect that person to be in the office in a hybrid environment, right? So probably 85 of our searches have a location requirement. Of those 85, probably 70%, the companies are hybrid. They're saying, we believe in face-to-face interaction. We believe in that collaboration for our teams. We need you to be in the office no less than probably 2 to 3. It's always 2 to 3 days a week, if you will. The balance, so the 15% between the 70 and the 85%, it's 5 days a week in the office. I will tell you right now, everybody, the hardest searches we do are those that are 5 days a week in the office. And there still are a handful of corporations that are all in on that, okay? But most great talent likes flexibility, and they usually are like, guys, I'm interested in this, but if they want me in there 5 days a week, I'm not gonna do it. That's just not for me, right? So we kiss a lot of frogs, as we like to say, to try to find individuals that are willing to go 5 days a week. But the locations are really all over the place. I will say this, the pandemic was a boom to the suburbs, as you all know, and also to the South, right? So the place where most people move to is where I'm located, North Carolina, right? The Southeast has had a huge amount of movement in this particular area, just because people said I can go work anywhere and I'm gonna go to warmer climates and things along those lines. And so, but in general, I think we're not seeing huge regional differences in hiring trends. Igor, let's see. Well, it seems that it's not a good time to be an independent consultant. Could you please give us some information, all right, how this affected freelance consulting? All right, how this all affected freelance consulting scene. I believe that I'm calling freelance the same as an independent consultant, but maybe there's a difference between those two. Is there? Is there a difference?
I think there's just a slight difference in nuance, Chad, but I think for our purposes, you could use them interchangeably here.
Yeah, yeah. By the way, guys, I've got some good. I'm gonna talk about the good stuff, right? So in a second, I want to talk about the good stuff. So let me go through a couple questions. I'm gonna tell you some of those where we're seeing some positive demand.
Yeah, it'd be great to see, Chad, where if there's pockets where you are seeing demand, like restructuring or networking capital people or cost-cutting type lean ops. Yeah. What are the areas that you're seeing demand?
Right. What's selling today? Right. Where are we seeing demand? So in the world of consulting, okay, no surprise, we're seeing an increase in demand for transformation skill sets, which is really all about cost containment, right? So companies are looking into their crystal ball right now, and they're looking into the future, and they're saying, oh, you know what, yikes, the next 2 years are probably a little bit questionable. We probably aren't going to hit our revenue targets, so we had really better improve our cost position let's get some transformation experts in here to help us, right? So if you've got skill sets or capabilities in how companies can reduce their cost structure, right? Because a lot of companies have built up some pretty big investment cost structures over the last couple of years, right? During heydays, companies make a lot of investments. We get outside of our core. We start thinking really creatively. And then the second that we see that turnaround, all of that extracurricular stuff comes to a halt. We get back to the basics, right? And companies need help unwinding some of those investments. So if there's some transformation capabilities out there, some cost containment capabilities out there, that is really, really helpful. Let's talk about private equity for a second, because a lot of you, I suspect, support private equity firms and support private equity-backed portfolio companies. If not, I will strongly encourage you to look into that space, right? Think about, private equity firms, as we all know, invest in companies, right? Investments are really slowing down right now because the cost of capital, right? The cost that they have to borrow money to buy those companies because of the increase in the interest rates is much higher. So deals flow is going to slow. It has already slowed. It will be slow for the balance of this year. So if you're a private equity firm and you're not going to do as much investing, what do you have to get right? You've got to make sure that your existing portfolio companies are really performing. So they're not investing as much in new companies, but they're investing a lot in their existing companies. They got to make sure those existing companies reach their full potential, realize that value creation plan, so that when they sell that business in a handful of years, they sell at that premium price. So they are constantly thinking about, how do I improve operations for my portfolio companies? And they will spend money to save money. They will spend money to make money. And what we're seeing within the world of private equity are spikes of demand in a couple of very specific areas. So one is transformation and cost cutting, right? So that's certainly out there as well. But we're also seeing it in finance and accounting capabilities, kind of office of the CFO type stuff, right? There's a lot of private equity firms that say, hey, listen, I own 25 companies. I got 25 CFOs. I want all of those CFOs giving us the same reports, implementing the same best practices. I want to make sure that I'm sharing capabilities across that group. So if you're a finance individual or an accounting individual, your skill sets could be highly valuable to private equity firms in those office of the CFO type roles and demands. We're seeing a lot of spikes in demand for talent professionals, right? So private equity, 1/3 of what a private equity firm, the value that they add is making sure that they have the right people in the right seats on that bus. So there's a lot of private equity firms that are constantly saying, hey, I need talent professionals that can evaluate talent within my portfolio companies to make sure I've got the right people in those right seats on each and every one of my buses. So if you've got talent capabilities and skill sets, I think that's an area where you can be effective. And then the other, which we're seeing a lot of demand in, is operations and supply chain. Think Lean Six Sigma type individuals. So if I'm a private equity firm with 25 portfolio companies and I've got a lot of manufacturing, I might have 100 warehouses and manufacturing facilities. I need to make sure that those warehouses and manufacturing facilities are lean and mean during a downturn. So if you've got skill sets or capabilities in those particular areas, it can be really, really helpful. Across every last one of our practices, by far the hardest position for companies to fill are finance roles. CFOs and FP&A leaders, by far the hardest positions for any company to fill. Believe it or not, in the world of private equity, CFOs are a lot harder to fill than even a CEO. I know that sounds strange, but CFOs, are by far the hardest. This is all a demand and supply imbalance, right? Private equity has grown exponentially over the past decade, right? Now, if you name any company right now, any company, I'd probably tell you there's a 50-50 chance there's a private equity firm that has at least partial ownership or some growth equity in that particular organization, right? So private equity is ubiquitous now. They're everywhere. And there just aren't enough private equity ready CFOs to go around. So if you are a finance person, or if you've ever thought of becoming a finance person, I will tell you the world is your oyster, even right now. That example that I gave earlier, we literally saw a counteroffer for someone for 40% increase just to keep them. That company knows going and trying to replace that individual, so hard to do, right? So finance in particular is easily the area where we see the most demand. Maybe one other thing that I'll just mention to everybody is that if I was an independent consultant, freelance consultant, if you will, what would I do? What would I be doing right now? The first thing that I would do is specialize, right? I would choose a couple of things that I do really, really well and commit to those things as my specialties. Many of you, I suspect that the demand was so high for your services over the last 2 years that companies were saying, it's okay if you've never done it before. You're a smart enough person. You'll figure it out, right? You'll figure this out. When we see a downturn, all of that generalist type expertise tends to be less demand for that and a lot more demand for your specialties, right? So these things need to be like your true specialty. What are those things that you can do in your sleep? It might be stuff that you get kind of bored doing because it's really not a challenge for you. I hate to say it, boring is probably pretty good in recessionary times because it means you're a true expert at it. You know, in those up markets, companies are more willing to roll the dice. It's more acceptable for a project to fail. Heck, in some companies, they reward failures, right? Way to go. Thanks for trying type stuff. Not in a down market, right? People get fired for spending money that doesn't yield a return in a down market. And because of that, generalists tend to struggle in a down market, right? So you need to really pick those areas of expertise where you can do the stuff in your sleep. And then the second piece is just market yourself aggressively as a specialist in those three areas. And this is hard to do because in a down market, when you need business, right, the tendency is to maybe go broad. I can do anything you need, right? But in reality, I just don't think companies want to hire a generalist when they need a specialist, especially, you know, in a time like this, right? If they're going to spend money or justify the spending of money, they have to know that those dollars are going to yield a really strong return. And they know that they're going to yield a strong return if they hire an expert, right? And so as much as you can quantify in your marketing pitch, I would, right? So, you know, I would say something like, hey, what I do, my specialty is I help companies improve their procurement savings, right? The last 3 companies I've worked with have saved an average of 17% from the contracts I've negotiated for them. Something like that, right? That's an easy one. Procurement's an easy one to kind of quantify, but I would try to quantify as much as you can. My core message on all this is specialize and kiss a lot of frogs, right? If you do that, I think you'll keep yourself busy on that front. My team, I'm happy to, let me pause and I'll go back to answering questions, but Will, if there's anything else I can help with on that front, I'm happy to as well.
Well, Chad, you've shared a bit about how the consulting firms are down in terms of their demand. Could you give us a perspective about when you are looking to hire former consultants for full-time jobs outside of consulting firms and place former consultants, where are you seeing demand for those kind of skill sets?
Yeah. So the good news is, and I really do mean this, is we're seeing demand, a steady level of demand across all industries. So we're not necessarily seeing any specific industry that is outperforming others. Actually, you know what? Let me take that back just a little bit. Right. So areas where we're seeing kind of more consistent demand would be places like insurance. Okay. Insurance is a recessionary-proof industry. They're constantly, you know, thinking, how do we innovate? How do we grow? And so insurance companies are steady, right, in their hiring of sorts. Where we're seeing less demand is consumer-facing and retail, right? Even though retail, certainly on the grocery side, is inflationary or recession-proof, right? Specialty retail is really going to batten down the hatches in a time like this, right? So there's going to be very little hiring that will take place in those particular areas. Industrial, we tend to see steady demand. In general financial services, healthcare, and life science, we see steady demand. So those areas tend to continue to need great talent. But Will, I'll mention this. In the first 5 months or 4 months of this year, we've written 30% fewer searches than we did during the same period last year. So in general, the market is just down, right? Keep in mind, last year was probably the greatest year, right, for most recruiting firms. So to be 30% down coming off your greatest year is not the end of the world. But hey, it'll be a down year for just recruiting in general. And we follow a similar cadence to what you have for consulting services as well. What that means is you just have to crank up your marketing engine even more, right? Whereas the phone rang off the hook last year, not going to ring as much this year. We've got to do the outbound calling, just like I'm assuming you guys will have to do as well.
Chad, recognizing it's tough to predict the future,
Yeah.
what, just given the indications that you're seeing in your past experience, you suggested that we should prepare for tougher times ahead before it gets better. What's your kind of intuition around how things might play out over the next 6 to 12 months?
Yeah. Team, I'll be honest with you. I'm kind of bracing for it to be worse than I hope, worse than I think. Part of that is because in the last week, I have sat in on live in-person conferences, one with Henry Kravis, who you all may know is one of the most, part of KKR, founder of KKR, one of the most successful private equity investors in the history of mankind. He said last week in a meeting that I was at, the United States is currently on the beach enjoying the sun, and they have no idea the tidal wave that is about to hit us, which is not a great statement or analogy, but that made me nervous. The other was just yesterday, I was at a conference, and an economist from 13D was there and said they believe it's going to be a very hard landing, and I respect those guys a lot. They do great research. I think I'm going to be a little bit nervous about it. And I think the people that crank up their business development and marketing engine now are going to be in the best position to thrive during the next 6 to 8 months. So my guess is that between now and 1 year from now, we're going to be we're going to have to get scrappy, everybody. And so I will tell you that our team, it is easily the primary topic that we talk about. We've got right now, at this very moment in time, we have 119 retained searches that we're working on. At the peak of last year, we were at 155. So we've gone from 155 to 119. We are working our tail off on landing new searches. And I suspect we definitely go below 100 this year on the searches we're working on. So even working our tail off, we're expecting that the number of searches we work on will drop. By the way, Eric, I saw Eric Pepper. I saw that your question was looking at the list of opportunities on the Charles Aris website. Impressed by the extent. Are these all active searches? The answer is yes. There's no searches listed on our website that are not active open searches that we're working on right this second. So just so you know.
Yeah,
so I don't know if all of them get listed. There are some searches where we actually don't list them because we get inundated by applications, and we want to reply to everybody, and we just can't do it. There's too many. But I suspect that the majority of the 119 are listed there.
Chad, we've had a couple questions about other geographies outside the U.S. I think your firm is primarily focused on the U.S., yeah. But what insights can you share, if any, on kind of Europe, Asia, what you think is going on in those geographies?
Yeah, well, good question. So Charles Aris is the U.S. affiliate of an international consortium of search firms that goes by the name of InterSearch. So we represent the U.S., and we have partners in 50 other countries. We just had our annual meeting in Colombia, in South America last month, and my brother, who is our chief operating officer, attended that. And the feedback from the international countries was similar in nature. Right. In general, I think the saying goes that if the U.S. sneezes, the rest of the world gets a cold, type of thing. And I think that's definitely what the international countries were seeing. And so, I think it's going to be a tough year globally, frankly, for organizations. And I hate that I don't want it to. People to feel like I'm being this doomsday individual. I don't think we're going into a depression, but I think we're going into a recession. And hey, when you go into a recession, you need to have a recession playbook, and you need to execute on it. If you do that, you'll be fine. But if you're waiting around for the phone to ring like it did last year, that's not a strategy that I would encourage at all. Right? I would say implement your recession playbook. But I think internationally it's going to be a tough year too. I don't think any part of the world is going to go unscathed, unfortunately.
Chad, Claire asked a question, and several other people as well. What insights do you have in terms of fee levels? Are you seeing the consulting firms reducing their salaries or reducing their fees to clients in this environment?
Yeah, so we have not seen we've not. We're definitely seeing a reduction in the offers that consulting firms are making to the next crop of candidates. So we're seeing slightly lower compensation, but not low. Sorry, not lower than the class before, right? So so in other words, compensation is going up, but at a decreasing rate, right? The compensation continues to go up, but at a decreasing rate. Fees wise, Bain, BCG, and McKinsey will hold their fees as steady as they possibly can for a long time. Where we see them make adjustments, they will add more consultants to existing projects to keep their team busy and to help with learning. So they'll say things like, hey, we're not lowering our fees. If you work with us, we're not going to lower our fee, but we'll double the size of the team. And we'll do some extra stuff for you on the side, right? We tend to see that, if you will. If the recession gets really, really bad, yes, we will see a reduction in fees. I do not believe, here's the thing. If I was an independent consultant that had specialty capabilities for which I was a true expert and I could do that work in my sleep, I would not lower my fees. I would simply get out there and kiss more frogs to find those organizations that need my services and that would value those services, right? So lowering of the fees would be my last resort. We have not even hinted at lowering our fees at Charles Aris. It hadn't even come up as a topic, right? So, and I don't foresee that happening in the near future. Our belief is you just got to kiss more frogs to find the business that will gladly pay your fees and value it at the same time.
We've had a couple requests about specific areas. Wendy asked about the data science market, and Francisca asked about ESG sustainability.
Yeah. Data science, oh my gosh, the amount of attention that's being played to AI, which is a part, kind of a part of data science is huge. Data science, if I had, well, I have 3 kids, but if my kids were probably more analytically minded, I would say, oh my gosh, data science is a no-lose career choice over the next 10 years. AI, of course, right? If you are an expert in AI, you can do anything you want. That's the same kind of demand that we would see for finance, great finance talent. So those areas, absolutely, huge amounts of demand. ESG is harder. And ESG is harder because it's unfortunate that I think this is the case, but for a lot of companies, ESG is a luxury. Okay? It is not at the heart or the core of their business. It should be. I think we would all agree that it should be. And it is becoming more of that over time. But ESG is an area where, with a recession, we're going to see companies downplay their focus on ESG and downplay the amount of investments that they will make on ESG. Because at the end of the day, they've got investors, and those investors expect profit, and ESG sometimes can be a cost center. So cost centers in general are going to slow down, and unfortunately, ESG is likely to be one of them.
Chad, have you seen any boutique consulting firms in particular, perhaps in some industry or functional niche, that are actually, doing great?
Yes. Those that, there are some consulting firms that are experts in finance. And if companies cannot hire enough FP&A talent, they will absolutely outsource those capabilities to consulting firms. So there are a handful of boutique finance consulting firms that are busy, really busy. Now, almost all the consultants that they hire are maybe a CPA or have spent a lot of time in finance over the course of their career, but that for sure. I would also say that just data science in general. Will, as you know, we've called you to say, Will, I need some data science assistance, right? We need some assistance with survey, data and things like that. You've been great to steer me to a couple of your people. Really appreciate that. And so I think, big data, absolutely, you'll see demand for that. And of course, anything in AI, you're gonna see areas of that as well. And then there's always going to be pockets, right? Like, healthcare companies, providers, hospital systems and things like that, they are always struggling with how do we get paid faster, right? If you've got capabilities or skill sets that can help hospital systems to find a way to get paid faster, yes, your services are always going to be in demand, right? So there's always going to be those little niches that you can find in certain industries. But broadly speaking, those would be areas I would say we definitely see demand.
Chad, you have a self-selected population on this call that's primarily interested in independent consulting and projects, but some people will be considering stepping back into a full-time role. What are your suggestions for people in terms of how to best interact with a retained search firm like yours? What's the best way to get on a radar screen of a firm like yours and to be a great candidate that would get noticed?
Yeah, Will, thank you. That's a great question. So the one thing to keep in mind, everybody, is that as awesome as you are, right, as great as you are, all of the demand from me comes from company, right? And so I will tell you guys, I talk with absolute rock stars in their field every single day that I can't place. And the reason why I can't is because it just doesn't happen to align with the 119 searches that our firm is actively working on right now. Do we get those individuals on our radar screen so that we can reach out to them when the 120th search shows up and it happens to be a perfect fit for them? Absolutely. Right? An executive search firm is only as good as their database and their ability to mine it. And we're really good at that. We have to be good at that, right? So what I would say is you really don't have to do much to just make sure you're on an executive search firm's radar screen. Send your resume. I promise you that resume is getting into their system, right? Every resume that comes to us absolutely gets loaded into the system. The hard part is a lot of times people say, hey, listen, can I get 15 minutes of your time? Can I get 30 minutes of your time just to walk you through my background, tell you what I'm looking for, all that kind of stuff? That is really hard to do, right? Recruiters like me, even in when no one's looking, even in a candidate-driven market like we had last year, I could fill my day talking to individuals that would like to speak to me about their career. And unfortunately, there's just not, I literally have to dedicate that time to the search work and to the clients that are paying us. So in other words, send your information in, but don't be disappointed if a recruiting firm or a recruiter says, I'm so sorry, I can't spend time with you. Know that your information is on their radar screen, and then try your best to put as much in your email that says, this is what I'm looking for. Because not only will we upload your resume and it becomes searchable and all kind of things, but if you say, I'm looking for something in financial services, in marketing, in this region of the country, that all gets added to your profile, right? And so that way, as those opportunities present themselves, the first place we do is we go right to our internal database and we say, who do we know? Who do we interface with in the past that we think could be a potential fit for this? So it's really, you don't have to do much. I think sometimes people over concern themselves with, I haven't talked to Chad, so therefore I'm not on Chad's radar screen. That's not the case. I promise you, you send me your resume, you're going to be on our radar screen. Also remember this. This is actually incredibly important. We are the 30th, I think last year, the 29th. Last year, we were the 29th largest executive search firm in the country by revenue, okay? And last year, we completed 265 searches. There's 330 million people in the United States, and we placed 265 of them. In other words, the likelihood that you get placed by an executive search firm is pretty low, right? At the end of the day, I'm not saying don't do that. Don't get on the radar screen of executive search firms. You should, okay? But never rely on that as your way to advance your career. The number one mechanism by which you advance your career to your next job is through you, is through your polite persistence, through you getting in front of individuals, through your networking for yourself. So I also always want to share that with individuals. Trust me, I would love to place you. Yes, it would be fantastic. But I also want to be realistic about what the market will bear.
Chad, you mentioned earlier, suggested that we consider and look into doing work with private equity firms and their portfolio companies. And
Yep.
Dwayne asked a question about how to do that. Recently, I was speaking to a partner at a private equity firm, and his advice to me was, I get pitched, this is the PE firm talking, all the time by consultants seeking to do work with our portfolio companies. But honestly, the best way to get embedded with us is to do work for one of our portfolio companies first and have them, say what a great job you did. So you should really be spending your time doing BD with the portfolio companies, and then you can maybe spread horizontally. What are your thoughts around how to approach and get work with private equity firms and their portfolio companies?
Yeah, that's a great question. And I'm not going to say that private equity individual is incorrect, because there's absolutely some truth to what they're saying. But that does not mean that I would give up on trying to approach the private equity professionals at the firm level either, right? As I mentioned before, if I work for a private equity firm, either on the deal side or if I'm in the portfolio team, my job is to know what the value creation plan is for that company and to know how I'm going to realize it. And that value creation plan includes a little bit of everything, right? In some cases, we're trying to grow revenue. In other cases, we're trying to reduce costs, right? Or improve efficiencies, whatever it might be, right? So I should have a view on what that portfolio company is absolutely trying to accomplish. And therefore, it's all about timing, right? I mean, I hate, just like anything else in life, right? If you happen to be that procurement expert who helps companies save money on their contracts, you know that there's a certain portion of companies that are struggling with that right this second. It's just a matter of who, right? The only way to figure that out is to get yourself out there and to kiss those frogs, right? So I would absolutely be sending those emails to those private equity individuals. And I would say something like, the title of your email matters. It absolutely matters, right? If I'm sending, like, every once in a while, I've got a private equity client and I'm trying to tease them a little bit with what I have for them, right? So I'll just email them and say, executive recruiter would like to talk. I mean, yawn. Oh my gosh, how many executive recruiters out there want to talk, right? So they're not going to say that. What I will say is, McKinsey top bucket performer specifically interested in this portfolio company, so-and-so healthcare, right? So they see that, they go, okay, someone from McKinsey specifically interested in this portfolio company, likely to get them to open that email, right? And then I say, hey, this is who I am, this is what I do. Check, I've got a tease them a little bit of a profile. I've got a McKinsey individual, top bucket performer for the last 5 years, all in healthcare, ready to make a change, wants private equity, specifically mentioned your company, would you like to talk, right? And that's often, and usually you'll get someone who says, hey, Chad, great candidate, great profile, not right for that, but what about for over here? Any chance that person might be interested in this over here? And now the dialogue is started, right? So I'll encourage you all to think similarly, right? About, you might say something like, saving 12% at blank company, right? Something that's going to get them to say, what is this, right? And then you say, this is what I do. This is how I do it. I could do it for this, or I've done it for other organizations like this, and I can do it for you, type of thing. But that title structure really, really matters. And that's in that email, a lot of quantifiable things. By the way, private equity firm, historically, Charles Aris, we lived on the telephone. Private equity is very specific, like a lot of private equity folks communicate via email. So I would send an email. 3 days later, I'd send the exact same email. I'd forward the exact same email. Just wanted to bring this back to the top of your inbox because I know you're busy. And then the next week, I'm picking up the phone. I'm making a phone call. And basically, hearing your voice can be important for them to realize this is a professional, a normal individual who really can help me, right? So hearing your voice can be very important in that as well. But I kind of go email, phone call would be my order of operations there to try to get with private equity firms. And at the same time, Will, I would also learn about that private equity firm's portfolio companies, which are always on their website. Go to any private equity firm, there's all their portfolio companies listed. And I would be reaching out to those private equity firms as well. Keep in mind, the CEO of that private equity firm is in lockstep with the private equity firm, or the CEO of that portfolio company is in lockstep with the private equity firm. They are all about value creation plan, value creation plan, value creation plan. They know what they've got to accomplish. So if they need to save money and you can help them save money, that CEO is going to pay attention to it as well, or the CFO, or whoever it is that your service would target within the business.
For someone who's been an independent consultant for some period of time, a year, 2 years, several years, and if they're interested in going back and taking a full-time role, what are some ways that you can make sure you're positioning your experience as an independent consultant appropriately? Some companies may be enlightened and see that it's been a valuable entrepreneurial individual. Some companies maybe not so much. So how could people on this call present themselves and make sure you're articulating that you weren't just unemployed, but or lightly employed, but that of the value that you can deliver?
Well, it's a great question. So again, I'll kind of go back to what I mentioned earlier, which is specialty, right? If all of you are going to be experienced hires, what consulting firms would call experienced hires, right? They have new hires, which are coming off of campus, right? Undergrad or MBA schools, whatever it is. But consulting firms always add experienced hires as well. But they don't add any experienced hires as generalists, right? They're not going to do that. They're only going to add individuals when they bring a specific skill set to the table that they're trying to add within their business, either grow because they already have a practice, they want to make it larger, or it's a net new. And so if you go in saying, hey, I'm a smart individual who can do just about anything, that's never going to fly, right? You have to go in and you have to say, I do these two things exceptionally well. And by the way, look at these 5, 10, whatever number of companies that I've done this exact thing with in the last couple of years. And if you'd like to talk to them about how awesome I am, I'm happy to make that introduction, right? Are you trying to add to this practice too? I would think that this would be a capability in a practice that you all at XYZ firm would like to do more of, right? So you've got to say, I'm an expert in this. I can bring that expertise to you. I can demonstrate that expertise based on the history, my history and my capabilities with plenty of people that will swear by me. It's kind of the key. That's how you'll get this. That's how you'll get back to a broader firm.
Amazing. Chad, I want to wrap this up with a question for everyone. So coming to the top of the hour, and I'll observe that we started with 97, I think, participants, and we have 96 now, which indicates that people were very engaged and appreciate what you had to say. If everyone, before you hop off, if you could put in the chat, what was one thing that you heard from Chad today that was challenging or surprising or insightful or helpful? It's always very valuable for a speaker to hear what resonated or was helpful to the audience. So if everyone could just do that, we will. It's always useful. And Chad, I'll get these. I'll send these to you from the chat. So I'm hearing focus versus generalist, specialization, kissing more frogs, email, phone call. Don't lower your price, but sharpen your expertise. You're seeing these, Chad. Did any of these surprise you?
No, it's great. And I so appreciate you letting me opine on topics that I'm incredibly passionate about and I just love. And the good news is not a lot of people are saying this downturn is going to be, because I don't want to be a doomsday guy.
So Chad, thank you so much. This was fantastic. I really appreciate you joining us today. And we will make sure that everyone has the link to Charles Aris. So if you want to sign up for your periodic notes on the practice, as well as the compensation survey, that is the industry-leading compensation survey for consultants. Chad, thank you so much for joining today.
Yeah, my pleasure. Those compensation studies will be great benchmarks for you. And also, if you sign up for the newsletter, you'll just see what people are hiring in the marketplace. That will also be good insight for you as well. My pleasure, Will. Thanks so much as always for the opportunity. Really appreciate it. Everybody, be well. Talk soon.
Thank you, everyone, for joining.